BlackRock, the world's largest asset manager with over $10 trillion under management, is widely considered to be the one company that controls the world. With that much capital invested in humanity's most significant industry players worldwide, the firm has a pretty important say in the direction of global markets. But with that much control, you wouldn't expect many bumps in the road, right? Wrong. Recently, BlackRock has found itself at the center of a heated battle over ESG investing, that is, environmental, social, and governance. In a stunning blow, the state of Texas recently pulled $8.5 billion of the Texas Permanent School Fund's investments from BlackRock, citing the firm's alleged boycott of the oil and gas industry through its ESG policies. The Texas State Board of Education Chairman Aaron Kinsey said the move was made to comply with a 2021 state law that prohibits Texas governmental entities from doing business with financial institutions that boycott energy companies. BlackRock's dominant and persistent leadership in the ESG movement immeasurably damages our state's oil and gas economy and the very companies that generate revenue for our PSF, Kinsey stated. That's fair enough, given that oil and gas is huge business in Texas, where the Permian Shale Basin in South Texas is one of the most significant oil-producing regions on the entire planet. But what exactly is ESG investing, and why has it become so controversial? ESG refers to a set of standards used to measure a company's sustainability and ethical impact. It involves factoring in environmental concerns like carbon emissions, social issues like workplace diversity, and governance matters like executive compensation when making investment decisions.
And in principle, at least the good governance thing should work. But the thing is corruption exists. I don't know. Your ESG score, so the G part, will go up if you give corporate bonuses to yourself for implementing ESG. That's just naked corruption, right?
In recent years, BlackRock CEO Larry Fink has been one of the most vocal proponents of ESG in the financial world. Through his influential annual letters to CEOs, Fink has pushed companies to embrace sustainability and social responsibility, arguing it will lead to better long-term financial performance. BlackRock currently has around $700 billion invested in ESG-focused funds. See what we mean about shaping the direction of global markets? However, critics, particularly conservative politicians, have accused BlackRock of putting a liberal political agenda over the interests of its clients. They argue ESG is a way to force companies to adhere to certain ideological standards and amounts to woke capitalism. Republican-led states like West Virginia and Florida have also pulled funds from BlackRock due to its ESG stance. BlackRock has pushed back against these accusations, claiming it is still heavily invested in traditional energy and is merely serving clients with a range of objectives. We are the world's largest investor in fossil fuel companies, and, as a long-term investor in these companies, we want to see these companies succeed and prosper, said BlackRock's Mark McCumb in a letter to Texas. However, BlackRock has admitted in regulatory filings that its ESG focus could adversely impact the firm's core business and reputation. CEO Larry Fink has even stopped using the term ESG because it has become so politicized. I don't use the word ESG anymore because it's been entirely weaponized by the far left and weaponized by the far right, Fink said. Despite the backlash, some research shows ESG can have a positive impact on both the environment and financial performance. Higher ESG scores have been linked to lower stock volatility, and sustainable investing is booming, with ESG assets expected to reach $30 trillion globally by 2030. But clearly, navigating the political minefield that ESG has become is a major challenge for BlackRock. The loss of Texas' $8.5 billion investment is no small matter, even for a behemoth managing $10 trillion. With more states threatening to divest, BlackRock's ESG ambitions could prove very costly. Some argue BlackRock has no one to blame but itself for the current ESG backlash. Critics say the firm's own aggressive push for sustainability, its outsized influence over corporate America, and the fuzziness around what exactly qualifies as ESG have painted a target on its back. As the ESG culture war rages on, BlackRock finds itself in an increasingly difficult position, trying to balance the demands of clients, activists, politicians, and its own principles. How Fink and his firm navigate this crisis could determine the future of the ESG movement and reshape the relationship between Wall Street and the business world for years to come. One thing is certain, with trillions of dollars and a planet's future on the line, the stakes couldn't be higher. In its defense, BlackRock published a letter claiming the Texas fund's decision happened behind closed doors and will hurt the state financially. The firm said it has helped the fund beat benchmarks and generate strong returns. BlackRock also denied discriminating against oil and gas, publishing a list of its fossil fuel investments as evidence. However, critics argue this misses the point. They say BlackRock is using its enormous voting power to force companies to comply with ESG standards, not boycotting industries entirely. BlackRock didn't address this claim in its letter. The firm also blamed political corruption and a vicious witch hunt for Texas's divestment, but the process was quite transparent. The state legislature passed a law, the governor signed it, and the pension fund followed it by pulling money from BlackRock. Going forward, BlackRock will likely face more investor withdrawals and negative press as its ESG influence wanes. The company has stopped using the term ESG and scrubbed it from its website, but the underlying practices remain. Its attempts at damage control, like the Texas letter, have done little to stem the bleeding so far. In summary, BlackRock's $8.5 billion loss in Texas marks a major escalation in a battle over ESG investing. What started as a well-intentioned effort to promote sustainability has morphed into a political and cultural firestorm, with BlackRock caught in the crosshairs. As more states line up to challenge the investing giant, the future of ESG hangs in the balance. Can BlackRock chart a path forward that satisfies its critics while staying true to its principles? Or will the ESG movement be crushed under the weight of its own contradictions and controversies? Only time will tell, but one thing is clear, the outcome of BlackRock's ESG crisis will have far-reaching implications for the business world and beyond. The firm's dominance over the investing landscape means its every move sends shockwaves through the global economy. If BlackRock can successfully defend its ESG approach and weather this storm, it could embolden other companies to follow suit and accelerate the shift towards stakeholder capitalism. But if the anti-ESG forces prevail, it could mark a return to the shareholder primacy model and deal a major setback to the fight against climate change. There are also broader questions about the role of giant asset managers like BlackRock in shaping corporate behavior and public policy. With trillions in assets under management, these firms wield enormous power and influence. Some argue this concentration of financial clout is anti-democratic and poses a threat to free markets, especially when the most powerful corporation in the world starts to present itself as some kind of moral police. Others counter that large institutional investors provide necessary oversight of wayward companies and can be a force for positive change. After all, who else has the scale and resources to take on issues like climate risk, income inequality, and racial injustice? As the world grapples with these thorny questions, BlackRock's ESG reckoning looms large. What happens next could redefine a relationship between business and society for generations. The stakes have never been higher, and the world is watching closely to see which side will prevail in this epical struggle. Will it be the ESG advocates, led by Larry Fink and his vision of a more sustainable, inclusive form of capitalism? Or will it be the ESG skeptics, ranging from GOP politicians to free market purists, who see the movement as a dangerous distortion of the investing process? In the end, the answer may come down to a simple calculus. Which side can deliver the best returns? If ESG funds continue to match or outperform traditional investments while also mitigating risk and aligning with shifting consumer values, then BlackRock's big bet may pay off. But if the anti-ESG crowds can prove that prioritizing social and environmental goals undermines financial results and economic growth, then the backlash may be just beginning. I remember years ago studying my law degree and being asked to write my final year piece on the benefits of stakeholder capitalism. It all seemed so positive back then, and there was a clear vision of a system that would help transform the world into a more wholesome place, where big corporations have a high regard for the environment and local communities. But has this vision turned into a nightmarish reality of allowing a centralized system of global control? As this high-stakes drama unfolds, one thing is certain: the world of investing will never be the same. The old rules are being rewritten before our eyes, and the future of capitalism itself is up for grabs. In this brave new world, where trillions of dollars can turn on a single acronym, BlackRock finds itself on the front lines of a battle that will define our economic destiny. How this ends is anyone's guess, but one thing is clear: the age of ESG has arrived, and there's no turning back now. Thanks for watching this deep dive into BlackRock's ESG crisis and the broader battle over sustainable investing. If you found this analysis insightful, be sure to hit that subscribe button, as there's plenty more where that came from. In the meantime, let us know your thoughts in the comments. Do you think ESG is the future of investing or a dangerous distraction? Can BlackRock navigate this political firestorm and emerge stronger, or will the anti-ESG backlash bring the movement to its knees? Sound off below and join the conversation.